Hello everyone, welcome back to Trade Pockets Plus, where we discuss about finance, business, and self-development. Today I'll be showing you 5 stocks you can buy in this July to increase your portfolio. And now, given the market conditions, given what is happening, or the market rebounding, uh, than where we were back in April. The market has rebounded, and that has made it a very challenging environment to really find undervalued stocks that you can buy, because the market is now moving into a more profitable environment or territory, okay, than when we were in April, okay. But however, having said that, I've managed to pick 5 stocks that I think, if you can invest in these stocks, your portfolio is well rounded and solid, and you are prepared and positioned to gain from it. So let's dive in. This is a detailed analysis on these 5 stocks that you can pick up in this July if you have not already done so. Focusing on companies with strong fundamentals and attractive valuations, growth potentials. These are the 5 stocks. But before I give you the 5 stocks, let me tell you the reason why I think that they are good picks. Market resilience and stock picking challenges, like I said before. Despite recent market highs, finding undervalued quality stock remains challenging. Okay, this reflects a market where many popular stocks may be fully priced, requiring deeper analysis to uncover compelling opportunities. And on this episode, I've approached the balanced valuation, technical, and growth potential to build a diversified portfolio. But I'm not going to give you high octagon technical analysis here, because you're not interested in that. So let's look at the first company, Alphabet. Alphabet is one of the biggest companies in the world with $2.1 trillion market capitalization. And the reason I love this company, but one may ask, why is Google? Alphabet Alphabet owns Google and many other companies. One may ask, but why is Google undervalued? I will tell you the reason why in a second. But Alphabet core business remains strong, but its investment in autonomous driving vehicle, Waymo, and AI are largely underpriced by the market, and this is the reason. Do you see the reason now? Okay, that's just the reason. Now, the company trades at a forward PE ratio significantly below its historical average, suggesting a margin of safety and potential upside as these emerging sectors mature. Emerging sectors of AI and robotaxi or self-driving taxi. This highlights the importance of looking beyond headlines, stock headlines and stock performance, or underlining innovation. But you have to look at what is the company doing, the fundamentals. Okay, what is keeping this company in business, or where would the company be in the next couple of years? And the number 2 stock is the Trade Desk Digital Advertising Research. Now, this is it's a stock ticker TTD. This is an advertising business, and I'm going to tell you the reason why I picked this company, because if you listen to one of my videos in the last 2 weeks or 3 weeks, now I spoke about why this stock is a great buy, and now it is a great buy, even though it's undervalued. It's a great buy because it's undervalued, and soon the company is going to appreciate. Now, TDD stock has been severely punished due to disappointing earnings and caution guidance. Yet recent improvement signals a possible turnaround. The stock low price to sales multiple relates to its historical average and expected revenue growth of 18% over 3 years point to significant upside if the company can regain investors' confidence. This underscores how market overreaction can create buying opportunity in growth sector. And number three is Qualcomm, a strategic diversification. Qualcomm transitioned from a handset-focused company to a broad portfolio including IoT, AI, and automotive sector demonstrate how legacy tech companies can reinvent themselves. The stock's inexperienced valuation metrics relate to peers combined with a technical breakout makes a well-timed buy. This illustrates the importance of management execution and portfolio evolution in sustaining long-term growth. And number three is defense sector. This is a very big, giant defense company known as Northrop Grumman. This sector stability amid geopolitical risk. This sector is stable. Northrop Grumman's steady performance amid increased defense spending by global allies, especially due to Middle East and European nations tension, exemplify defense stock as a defensive yet growth-oriented sector or segment. Why not cheap? Its support level and reasonable valuation suggests a low risk, strategic holding in uncertain terms. This reflects how macro geopolitical and factors in not just macro but also micro geopolitical factors into the sector allocation. Okay, and the next one is McDonald's. McDonald's is not just a restaurant chain. McDonald's is actually a real estate business. Okay, it's not just about double cheeseburger and with cola and French fries. No, they're more than that. McDonald's is a real estate play. McDonald's unique business model, owing much of the real estate where franchising operate, position it's more like a real estate investment trust with stable cash flow rather than a traditional restaurant chain. Despite recent traffic challenges and price hike, the stock trades below historical valuation multiple and near technical support, offering a compelling entry point for income-focused or value investors. This insight encourages investors to look beyond surface business model to underlying asset quality. And when you combine all of these, what I'm trying to say here in a nutshell is that these five stocks, if you can add them to a portfolio, they will position you for a higher earning in the future and very soon. Overall, my take is this. This video is offering a thoughtful, well-rounded investment thesis on 5 distinct stocks with varying sector exposure and growth drive. I've provided you with actionable insight, granted with what I think of the stocks and how they will perform in the near future. If you can jump on board right now because the stocks are undervalued, now you will benefit in the long term. Folks, if you've enjoyed this high octagon analysis, I would like you to subscribe, hit that notification bell so that whenever we drop a new video, you'll be the first one to pick it up. Until next time, take good care of yourselves and each other. We love you. Bye for now.